Hello friends, welcome back from Bitcoin Technical Analysis. I'm your pal, Rocky Outcrop. We're all Rocky Outcropticians here together. Welcome to the family if this is your first time joining us. And of course, be aware that I also do Ethereum, Chainlink and Tezos videos on a daily basis. So if you want to see anything, if you want to just look across the markets, for instance, that's a good idea. And if you're actually directly interested in those coins, well then definitely check out those videos. So what have we got behind me here? What are we looking at just now? Well, this is the CME chart, the coronal mass ejection chart. And Chicago Mercantile Exchange. And of course, what were we looking at over the last few days in terms of this chart was just whether or not we would see a gap open when the markets open back up for trading on the regular. So so actually on the 24-hour time frame then there wasn't a gap. So that's interesting enough to see. Now, who likes 4-hour gaps out there? Now we know that there are people in the world who do like the old 4-hour gaps, and it's kind of worth pointing out that there is indeed a gap on the 4-hour chart on the CME. And where is that currently at the moment? So that's down there, that 7.6 area. Let's just kind of just shove this line here in there, and we can say that that's where the gap is. And we can go back to the 24-hour time frame. Take a look, and it's not like outside the it doesn't seem like a million miles away. So could that gap get filled? Yeah, it could, and we can leave that line on there and just see what happens with it over the next wee while. But anyway, overall things have been bullish with Bitcoin again of late. So let's just tune in then to the regular charts and see what can happen. But to wrap up here on the CMEs, if the prices were to drop down to fill in that gap, let's go back down to the 4-hour chart and look at it and say, like, if we came right down here to 7.625, what would that be in terms of the spot prices? Well, right now the spot price is 7.694. Here we are, 7.750. So there's a sort of $50 to $60 premium currently right now on the CME chart. So you could say that maybe the prices would go down to 7.550 again or so on spot prices in order to see that being filled in. Who knows how that would pan out? Let's just, that's all we can really take from that there, from that. So anyway, but just actually, I suppose in terms of the bigger picture with the CME charts, what do we have in terms of up above us before we get to that gap? Is we've got 618 pockets, before we get to that 8,275 gap that goes all the way up to 9,000. So, we can bear that in mind as well if we do see prices continue on up towards that 8,000 area, that there would be a golden pocket retrace in there for the CME, the coronal mass ejection peoples. So here we are back on the spot prices, and I was going to say there, let's pick up where we left off yesterday, but we were very detailed yesterday, and we don't really need to actually specifically do that. On the 4-hour time frame, we can see that there's a few little things. We spoke about this recently enough, how they've got the 200 simple running along there towards the bottom end of our sort of channel, and it's kind of worth bearing in mind at any given time, I suppose, over the next wee while, if we do revisit the lows of the channel, that you're going to have this the 200 simple on the 4-hour time frame coming in around about those areas. Of course, they crossed in the positive bullish sense over there on the 7th of April. Then looking up the way at the time frames, you can see the 12-hour, of course, has got this death cross that happened back there on the 15th of March, and the 50 simples run along there at the bottom of the channel. So you've got that bottom of the channel confluence there yet again. And over here to the 24-hour chart, you can see there was also this death cross over here, but it happened on the 26th of March, and you've got the sort of the 21 coming in there at the bottom of the channel. And if I can just stick the other moving averages back on, because we have not actually had them on the chart for a wee while, we can see where they're coming in at the minute, and you can see that the 21 is just about to kind of cross over the 55. It should be a bullish cross, and that would be nice to see happen, and that the price action itself is coming right in at that 144 moving average, having touched it a few times and on the daily chart, and you'd like to see that being able to be broken up above. But you've got the 233 moving average in there at 7,900, the 200 simple in there at sort of 8,000, and golden the sort of 618 the 382 Fibonacci retracement here, or this 382 here on this bigger scale Fibonacci retracement that goes from June bodies down to the the recent low, you can see that that 382 comes right in there at that line as well, at just where there's a 618 as well. So there's a whole bunch of reasons around there where you can see profit taking happening, and if the prices were to continue on up. And what have they actually managed to achieve in the meantime? Well, there's this line here you can see extending to the left, that magnolia coloured line, and what actually is that line? That's the 50% retrace area on the Fibonacci retracement we drew in from the Valentine's Day highs down to the Friday the 13th lows on body to body. And some people are calling that March the 12th. By the way, obviously it depends where you are in the world. Don't get hung up on the on the details. As you can see, as I look at the chart here, you could say that that's March the 12th. You know, fair enough. Friday the 13th has a body just at the same place as it, and Friday the 13th being a much more you know, meme-tastic phrase. I always call it Friday the 13th, but don't get hung up. Yes, I'm aware it's actually the 12th. Don't get hung up on that. So anyway, we came into that 50% retrace area up here, and we know from recent experience just alone that when you got with that, this price action up here happened in around about a 50% retrace area as well, actually in around this sort of area here. When you know, coming up above that, going down again, up above again, down again, that if that were to happen in around this area, then I would be looking out at the 382 down here at 6,900 and 6,950 whatever area, and saying that's where the prices need to stay above, because that would also be the 236 Fibonacci retracement to the downside. Be looking at a few different things, and of course we'd have this fake out. We'd be coming down to more or less in line with this area here, which is the 236 retracement. This one here, you know, coming in and around this area here, you'd need to see support acting there to continue the macro bullish thing, or else you know, then at that point you're kind of looking and saying, well, does this become a local high, such as this was a local high and this was a local high and this was you know, is that what's going to happen, and will we see more lower lows like we've seen on the way down, you know? So like that's what we'd have to bear in mind should prices actually kind of come down to that 6,000, you know, our key pivot area, I suppose, that we've been talking about on the channel of 6,850 really. But in the meantime, we're above the 50% retrace, and it's reasonable enough to look towards these next targets towards the upside. Let's just dive down a bit again to the 4-hour time frame, check in with our recent highs, because you know we've had some more highs over here versus this high. So let's just draw on a wee brush thing so people can see it at home what I'm talking about in terms of highs. We could look towards like that and see if there's divergence between them, and we could also look between the last real highs, which is this one that we've just got now, and this one over here, and see if there's divergence between those two. So let's just go ahead and do that now. And so starting off with this one here, just draw on again so you can see at home what I'm talking about. Starting off between looking at these two highs here, then you know, between this area and this area, you can see that, well, that's higher on price action than it is over here. That over here in the RSI, that's the previous high was higher than the current one. So what do you call that? You call that bearish divergence there, and you can see the same setup there on that indicator as well. That's the stochastics. You can see here in the DMI, that's where the positive was, and that's where it is over here at the minute. So you can see that that is in fact not divergent, but it's you know, it's not, they're not a great deal away from each other, but it's not actually divergent. And then over here you can see in the MACD that this previous high is lower than the last one. So, no, that's the wrong place to be looking at there. There we go. It is divergent, you know, looking between this point here, looking between this point here and this point here. Yes, again as well, like you could say that there's divergence. You could make the argument that there's divergence across the board. But what about compared to just these last two more local highs? Then you've got this area here, this area here, and this area here. You've got this area here, this area here, and here, and you've got then this area. And you got this. And yeah, well, I mean, just looking here, that's divergent. You know, that's divergent. They've got divergence everywhere, bearish divergence everywhere. So that's something to be aware of. There's bearish divergence everywhere. That's a bit of a warning sign for us. Let's go up to the 12 hours low, where things can be a little bit more sort of accurate in that sense, and look between the last sort of few highs here and say that on the RSI that's not divergent. On the stochastics, between the most recent highs, you know, looking in here. looking in here in a bit more detail, you can see that we're just actually coming into the point where you could say maybe we're not going to be divergent, maybe we are, but we've not set it in yet. Sort of couldn't really say. And on the MACD, you can see that between this last two little peaks here, that's okay. Over here, you know, let's just see, is this what I'm talking about? Yeah, so between these last little peaks here, we're not divergent. So there's sort of conflicting story there. Going up to the daily time frame, do we have enough data here to be able to look to and say, well, during this upward trend, if this is the latest high that we've got in here, and this was the high before then, is that divergent? And we can look to this point here and this point here and say it's not divergent on the RSI, on the stochastics it is, on DMI it isn't, on the MACD it is, and you're looking at a sort of even score there. So there's a case to be made for either side in terms of the movements. The trend, the upward trend that we've got, so-called upward trend on the daily time frame, this is an upward trend, has not been reflected in the DMI throughout in terms of the strength of trend. So like, you know, that's just something to bear in mind as well. And then going up even higher to the 2-day time frame, because we've been looking at this as well recently and asking the sort of the bigger macro pictures on this, and can we see any divergence on this thing just yet? And if we look towards the MACD, looks like we're going to be escaping that divergence over the last couple of highs here between this point and the latest point. It's likewise in the DMI, likewise in the stochastics, and likewise in the RSI. So in terms of the positive case and looking at the 2-day time frame, there's a more bullish aspect there to that price action, and we could maybe anticipate a continuation of these highs, you know, overall. Of the higher highs and higher lows, but they go hand in hand, of course, higher highs and higher lows. So let's just take a sort of look again at the 4-hour time frames, where we come back to, as I was hitting undo there, and say where would you want to see a higher low come in at? And again, we're just kind of really looking towards the bottom of this channel. So where's the bottom of this channel really overall? And that's the 7,000. Well, you know, if we're to do it in the next day or so, then you're looking down towards the low 7,000, 7,200 or so would be a decent enough area to try. And I'm not a financial advisor, none of this financial advice, to try and look for a long 7,200, where we see this particular 50% retrace. 7,190, for instance, could be a good area to try and have a lower risk management long at. And in terms of like you know, just on the way there, should we see anything else? That's 4-hour 21 EMAs coming in there at 7,588, and the 7,450, of course, where we have that horizontal line, would be the two, you know, preliminary areas that I would be looking to in terms of maintaining ourselves, you know, just above this 50% retrace area in the longer term period, and that's kind of more or less it for this asset overall, just generally speaking right now for today. You know, things have gone well, that's great. Let's see if they can continue going well. If they need to set a higher low, and ideally it happen above 7,450. If it doesn't, and it comes down to 7,200s, where we have this on the daily time frame, a couple of EMAs towards the bottom end of this channel, and where we see this 50% retrace line at, then that's okay, it's understandable. Having been as high and actually above the 0.5 retracement here, to go down again as low as 6,950 would be quite bearish, because you'd be going past the 236 retracement point at that point, from an equivalent, you know, from this here to this, from the recent lows to highs point, you'd be going past the equivalent of a 236 retracement there on that one, and you know, you could start to kind of worry all, you know, but we want to see 6,850 be maintained really, and that 236 Fibonacci on the bigger time frame to be maintained in order to continue this macro upward movements that we've been having. As the, you know, if you've not taken profit on your longs, I'm not a financial advisor, and that's financial advice, in at this median line as we see is coming up here and touching off of it on the daily time frame here, and you can see that we've come up, touched off it several times, and we're at the 144 here with this red candle as we're kind of thinking about it. Then, you know, then maybe what you're looking to do is take profit towards the 8,000 area. I'm not going to argue against you for trying to do that. That's fine, but just to be aware of how we do already have the higher high in here overall, that we are at areas of resistance, for instance the median line of this channel, and this is a sort of, you know, as we experienced just back here on the 17th 18th of April, you can see things turn around here. So, you know, that's just so you know. Indeed, if you were planning on longing it from where the price is right this very second, that would be much more risky than longing it from the 7,450 areas, which over the last 3 days we've seen the prices come back down to and revisit a few times anyway. So that's kind of, you know, you should be able to take that and run with it, I feel, overall. overall, in terms of the bigger, longer picture, there are things that other things that we're looking at here in terms of these other charts like the GBTC, and so this is the 24-hour chart here, and we do talk about gaps and things on this chart, and are there any to be aware of? And if you sort of zoom this right out a bit, zoom it right out, you can actually see, incidentally, there's a little tiny gap in here down there at the 7.5 area, which I didn't actually point out in the past to people on the channel here over the last couple of days, so I thought I'd stick that in there just for the crack. Do these gaps get filled? Well, they do actually tend to get filled. They have done over time, so it's interesting to see. Oh, jeepers! It's interesting to see whether that'll happen. Now, do I put as much sort of stock in these gaps as I do in the sort of CME ones? I don't actually, but it's curious to see will we ever actually fill in this gap at all. And the reason why we talk about it, one of the reasons why, is that there was this gap over here back in April 2019, and people back then, we kind of just the world kind of agreed that this gap may never get filled. It may never get filled, da-di-da. And what actually ended up happening was it got filled, pretty much to the penny. Whenever we saw our drops happen on the 13th of March. So just to be aware, the gaps actually on GBTC do tend to get filled, and there is one to the downside. So that's to be aware of as the world goes crazy bullish at the minute. I've noticed in terms of I'm rather new to the whole crypto Twitter sphere, but I've noticed that the world seems to be crazy bullish over there, and that's cool and everything. It's cool, it's good to never. It's like there's lots of that. So it's great for everybody out there who wants to see the bullish case stuff. Makes my job slightly easier since they're talking about all this sort of stuff so much. Little things to be aware of course. You've got the DJI over here acting as a crap wedge, rising wedge, but who knows how things will pan out? Nobody ever knows. The charts in and of themselves aren't predictive. Statistically, it looks like it'll probably get a drop down, but statistically speaking, looking at terms of patterns and things like that, and looking at things like the shapes of some of these things down below, you could make various arguments based off of that. For instance, this upward trend indicator having just kind of gone down the entire time since we had this, the strength of trend was only ever to the downside, and there hasn't been any increase in strength of trend towards the upside ever. That sort of little things like that, but who cares really? Ethereum at the minute, by the way, didn't ever make it up into the 200s area, which is something to be looking out for if you're sort of looking across the board at different assets. The 8K areas, I'd say, would probably be in around the 200 areas with Ethereum. So see one asset move a lot compared to the other, then think about that in general. I don't really know. Anyway, as you know, there's thanks for sticking it through the video and making it all the way to the end here. And just before you tune out, I just wanted to say that there is that Bybit giveaway. Of course, there's still 3 of the 5 slots, I believe, maybe 2 of the 5 slots for the completely free, no deposit required bonus thing. And then, of course, that means that the other offer kind of runs over the next sort of 12 days, or so, I don't know. So you can, so if you want to get the deposit bonus, then check that out. If you've got any questions, then join the Discord and ask me about them. I'll tell you all you want to know in there, should you catch me when I'm online. Don't have it on my phone. I'm not going to be on there all the time. I don't want to have another addiction, So I'm trying to be sort of sensible about that. We'll see how it all goes. Thank you so much for tuning in. I'll catch you in the next episode.